Welcome back, everybody. So in this video, I've got my little helper with me today. He's being fussy. In this video, we're going to cover the journalizing for cash discounts relative to sales and purchases. So when you buy something from your suppliers and you pay within a cash discount period time frame, you'll be able to get a discount. If you extend a cash discount to your customers, then the same thing, but vice versa. So we're just going to go through those journal entries and see what they look like. So we're going to start with the sales, then we'll move over to the purchases. Okay, so I've got my journal pulled up here on the left, and I've got some transactions over here on the right. And so these transactions are grouped together. The first two here, this is a sale to a customer, and this is us now receiving our cash payment from the customer. Here is a sale, and then a return, and then a cash payment. Yeah, and then here is a sale and a payment with no cash discount. And so let's go through how to journalize each of these. So the sale transaction should just be a refresher to you because this is what we did in the last video. So here on August 1st, and I'm going to base this off of the periodic system. So I'm not going to do the additional entry for cost of goods sold that you would do in the perpetual system. I'm going to keep it simple. But the sale portion is the same, and so is the cash discount, the cash payment. That part's the same. So here on August 1st, we've got a sale, and it's on account. So we have an accounts receivable to Mesa, and we have a credit to our sales account for an amount of $1933.50. And you can see that we've offered credit terms to Mesa River Raft Company, our customer, of 210 net 30. So August 1st is the invoice date. If they pay by August 11th, then they will get a 2% discount off of the $1933.50. And here they do just that. On August 10th, they make a payment. We received the check, and it is for $1894.83 in payment of that invoice, less the cash discount of $38.67. So that cash discount is the $1933.50 times 2% equals that cash discount of $38.67. So we're not going to go through all the calculations on how to get to the cash discount. We did that in the last video. This one's just about journalizing it. So now over here in the journal, we need to go to August 10th. We need to debit our cash account because we're receiving cash, and we're going to debit it $1894.83. We're going to need to credit accounts receivable to Mesa because now they don't owe us any money. So that's going to need to be the full amount of $1933.50 because they don't owe us any of that. And then now I have a mismatch between my debits and credits. And so I'm going to introduce a new account, and you can tell it's going to be a debit because I need a debit balance here of $38.67 to make our debits and credits equal one another. So I'm going to have a debit, and I'm going to use a new account called sales discounts. And that's where the $38.67 is going to be. All right. It's a cash discount in the terms that we gave it to the customer because they paid us cash in advance, but it's a sales discount because it's on a sale. Now, there's also going to be a purchase discount when we are buying stuff from our suppliers and paying them on time. All right, not just on time, but ahead of time. So that's the journal entry. So debit to cash, debit to sales discounts, credit to AR. Now this sales discounts is a sales account, which is a revenue type, but because we've debited this account, it's a contra revenue. It's contra to sales. All right. Sales is going to be on your income statement as your main revenue stream. And then you're going to have underneath that, you're going to say less sales discounts, and you're also going to have less sales returns and allowances. So sales discounts and sales returns and allowances are both contra sales accounts. And then on the income statement, we're going to show all of that as well as the net sales. And why that's important is because it provides more information to decision makers. That's right. All right. It's important to be able to track and to know how much did you give away in cash discounts to your customers? How much did you just give away? I wanted to show you what the income statement would look like with the new accounts that we've established. And so here you see you've got on your income statement at the top, when you detail your sales, your revenue, you'll say revenue from sales, you'll have your gross sales, and then you'll have your less sales returns and allowances, less sales discounts. You'll add those up, and then you'll deduct those discounts and returns from your gross sales to get your net sales. So let's look at this next one here. So this is the same situation, except now we have a return that's been wedged in here. So this first transaction on September 1st, Whitewater Raft sold merchandise on account to Rugged River Company. So here we put September 1st. We're going to debit our accounts receivable to Rugged, the customer. We're going to credit our sales account, the total $36.14. And it says we sold merchandise on account, terms 210 net 30. So if they make a payment by September 11th, they will get a 2% discount off that 36.14. And before that can happen, on September 5th, they returned some of the merchandise. So here on September 5th, we have a return of $254 worth of merchandise, and we issued a credit memo. So now we have a debit to sales returns and allowances, and a credit to accounts receivable to reduce how much they owe to us because we no longer sold this stuff. And that'll be for $254. All right. Now on transaction C here on September 8th, we received a check from Rugged River for $32.92.80 in payment of the invoice less the return and less the cash discount. And so they did pay on time. September 8th is before the 10 days were up. One thing to note here is that this September 5th does not reset the timeline, right? The timeline is still based on the original invoice date of September 1st. Just because they returned something on September 5th, that doesn't reset the timeline. So they still need to make the net amount payment by September 11th. And that's what they do on September 8th. They made their payment. Down here, you can see how they got to the cash discount. I'm not too concerned about the calculation here. I just want to make sure we get the journal entries. So here on the 8th, we are going to make a debit to cash for what we received, $32.92.80. We are going to make another debit to sales discounts, in this case for $67.20, the amount of 2% of the net amount. And then we're going to credit our accounts receivable, and this will be for the full balance that was due. So it would be that $36.14 minus the return of $254. That gives us a balance of $33.60. And so that will be a credit to AR to relieve all of that. And just to make sure that we're in balance, I can add up our cash and our sales discount, and I'll get $33.60. So everything's good there. All right. And then this last one here, transaction A on April 1st, blue merchandise sold merchandise on account to yellow company, invoice $12.94, $94.50, terms 210 net 30. So let's record the sale. This is April 1st. Whoops. And so we have accounts receivable debit to yellow company, and we have a credit to sales. And so the amount here, $95.40. And then on transaction B on April 26th, we received a check from Yellow Company for $94.50 in payment of the invoice. So what happened? Well, Blue Merchandise Company offered a cash discount, but they didn't take us up on the offer. And so they had to pay the full amount because they didn't pay by April 11th. They paid on April 26th outside of our cash discount period. And so we are going to receive the full amount of cash for $95.40, and we are going to credit the full accounts receivable for $95.40, and there just is no sales discount. Even though one was offered, they didn't take us up on it. We don't need to journalize that. What are you doing? He's got a little tooth coming in. Yes, he does, but it's on the bottom, so that's not going to help you any. That will end it for this video. In the next video, we'll do a similar thing, but we're going to be looking at purchase transactions where we're dealing with buying things from our suppliers and then making our payments to our suppliers. Whether we get that discount or not is going to determine how we do our journal entry.